Welcome back to the deep dive.
Yeah.
Today we were doing something a little different.
Mm.
Usually we take a book or an article and we talk about the concepts. But today,
Yeah. Today is difficult.
today we are rolling up our sleeves. We are putting on the hard hats. We are heading straight into the engine room of business.
It really is the engine room. I mean, that is the perfect analogy for what we are covering today.
We are talking about SAP, specifically the Sales and Distribution Module,
Right.
or SD, as the cool kids call it.
Right. SD.
And I want to be crystal clear about this right off the bat.
Mm-hmm.
We are not just going to sit here and read a list of acronyms at you.
No.
We aren't just going to rattle off 50 transaction codes and call it a day. That would be boring for you and honestly pretty boring for us.
No, absolutely not. That would be so dry and, frankly, not very useful. Anyone can look up a list of T-codes on Google. You don't need us for that.
Exactly. We have a stack of material here that is essentially a consultant's field guide. It claims to cover the 50 most critical transaction codes. But the hook here, the reason we're doing this, is that it frames them through the eyes of an expert.
Right.
It's about the how, not just the what. It's about the philosophy of the system.
Right. It's the difference between being a user and being a consultant.
Yeah.
The user knows that if they type, say, VA01 into the box, they get a sales order screen.
Sure.
They fill in the blanks, they hit save, they go for coffee. But a consultant understands that VA01 is just the tip of the iceberg.
Closed front door.
Exactly. The real magic, the logic that dictates whether that order blocks for credit or ships on time or prices correctly or creates a massive accounting error.
Right.
All of that happens underneath the surface in configuration and troubleshooting.
And that is our mission for this deep dive. We want to take you, the listener, from being someone who knows the codes to someone who understands the architecture. We're going to walk through the entire order-to-cash cycle, from the engine room of configuration to the money of pricing, through logistics, and finally into the super user toolkit.
It's a journey from the back-end rules to the front-end reality. It's connecting the dots.
So let's do it. Let's crack open the engine room. Part 1 of our source material calls this Essential Configuration and Control. And it starts with a code that sounds like a V8 engine, which feels appropriate. VOV8.
VOV8, yes. Defines sales document types. If you're an SD consultant, this is your home base. It's where you live.
So to the uninitiated, this is just where you make a new order type, right? Like, I want a rush order, so I make a new type called ZRUSH. Or I need a credit memo, so I make another type.
That's the surface level. Yes, that is where you create the label, the ZOR or ZRUSH. But VOV8 is so much more. It's the control center. You aren't just creating a label. You are controlling the entire process flow. When you are in VOV8, you are defining how the business behaves. You are literally setting the rules of engagement for how the company interacts with its customers.
The guide highlights a few specific fields here that are make or break. The first one is the SD document category. It sounds technical, but it seems pretty fundamental.
Oh, it is. And this is a classic gotcha for junior consultants. You see, you can create all the custom order types you want, Z this, Z that, but they all have to map back to a hard-coded SAP logic.
Hard-coded.
Hard-coded. That's the SD document category. It's a single-letter code. C is for an order. H is for a return. J is for a delivery. You can't change those.
So I can't just invent a new category called, I don't know, Super Sale and give it category S.
No, you absolutely cannot. You have to play within the physics of the SAP universe.
I like that, the physics of the SAP universe.
Right. You can paint the car whatever color you want, but underneath it still has to be a car, a truck, or a motorcycle. If you try to make a return order behave like a standard sale, but you flagged it as category H for return, the system will fight you every single step of the way because the underlying source code treats H completely differently than C.
That makes perfect sense. It's like the DNA of the document. You can't change it.
It is the DNA. Precisely.
Okay, another field VOV8 controls is the incompletion procedure. I love this concept. This sounds like a strict school teacher looking over your shoulder.
That is exactly what it is. It's the gatekeeper. It's the set of rules that says, I will not let you save this order if you haven't told me who is paying for it.
Right.
Or, I won't let you proceed if you haven't entered a customer purchase order number. It prevents these, data light, half-empty orders from cluttering up the system.
So if I'm a user and I try to save and I get that annoying red error message pop up saying missing data, that's not just the system being mean.
No, not at all. That is the incompletion procedure in VOV8 doing its job, protecting the process. It ensures that downstream, the people in the warehouse or the team in finance don't get a half-baked order that they can't possibly process. It forces quality at the point of entry.
And there's a toggle here for immediate delivery. This seems critical for things like cash sales or rush orders.
Oh, huge. I mean, think about the physical process. If you walk into a store or retail outlet and you buy something off the shelf, you don't wait 3 days for a delivery note to be printed at a warehouse 50 miles away.
You take it with you.
You take it with you. So for a cash sale or a rush order type, you tick that immediate delivery checkbox in VOV8. And as soon as you hit save on the order, the system automatically triggers the creation of the delivery in the background. It skips a manual step to match the physical reality of the sale.
That is really cool. It automates the bureaucracy to match the real world. Okay, moving slightly deeper into the gears, we have VOV7, item categories.
VOV7, the heart of customization. If VOV8 controls the header, the whole document, then VOV7 controls the line item, the specific material itself.
And this defines the behavior of that line, right?
Yeah.
Like, is this thing a physical product we stock? Is it a service? Is it just a line of text for a note?
Exactly, and a single change here. I mean, a single checkbox in VOV7 ripples through everything. Billing, shipping, pricing, inventory, everything.
The source material brings up a really specific high-stakes example here. Third-party sales.
Yes, third party.
Okay, let's unpack that. This is where we sell something, but we don't actually touch it. A vendor ships it directly from their warehouse to our customer, right?
Right. It's a classic drop ship scenario. Now, imagine the billing relevance field in VOV7. This little field tells the system when to send the invoice to the customer.
Okay.
If you set that to A, which is the standard setting for delivery-related billing, you have a massive problem on your hands.
Why is that?
Because in a third-party scenario, you aren't delivering the goods. The vendor is. You don't create a standard delivery document in your system that you can post goods issue for. So if the billing engine is sitting there waiting for a delivery document to trigger the invoice,
It'll wait forever.
it will wait forever. You'll never generate an invoice. You'll never get paid.
So that's suboptimal. So what's the other option?
Well, you might think, okay, I'll set it to B, order-related billing. So you invoice the customer the moment they place the order.
Seems logical.
But what if the vendor doesn't ship it? What if they ship half the quantity? You've now billed your customer for goods they don't have, and you haven't even received the bill from your vendor yet. Now you have a very angry customer and a cash flow nightmare.
A total disaster.
Yeah.
So what's the fix? There has to be a proper way.
There is. And the expert tip here, and this is standard best practice, is to set the billing relevance to F.
F, what does that stand for?
It stands for order-related billing based on invoice receipt quantity.
That's a mouthful.
It is, but what it means is simple. You only bill your customer once you have received the invoice from your vendor, which proves they have shipped the goods. The vendor sends you a bill for 10 units, you enter that vendor invoice to SAP, and bam, the system automatically triggers the creation of the invoice to your customer for those 10 units. That logic, that entire business process lives entirely in one field in VOV7.
Wow. That is $1 million tip right there. It protects your cash flow and your customer relationship. Okay, let's look at VOV6. Schedule line categories. This seems to sit right on the border between sales and production.
It absolutely does. This is the why transaction. When a user screams, I booked the order, why doesn't the warehouse see it to pick it? Or why isn't the factory making this thing?
The answer is almost always hiding in VOV6.
Because this is what controls MRP materials requirement planning.
Yes, there's a little checkbox in there called Rec Assembly or Transfer of Requirements. If that is not checked for your schedule line category, the sales order is basically invisible to the entire planning and production side of the business. So it's just a piece of paper in the SD module.
Exactly. It's just a record of a sale. It doesn't trigger any demand to build or buy stock. You could have $1 million in new orders, but if that box isn't checked, the factory floor thinks they have nothing to do for the day.
That feels like a massive trap. Why would you ever not want it checked?
Returns, or even quotations. Think about a return. If a customer sends back a broken product, you don't want your MRP system to see that and think, oh, great, we have one more unit of available stock to sell.
Right, you'd end up selling a broken item to someone else.
You would. So for returns, you use a schedule line category like CN, which means no MRP. It brings the item back into the building for inspection, but protects the integrity of your planning data. It quarantines it, logically.
That's smart. And there's a connection to finance here, too, with something called movement types.
This is where SD shakes hands with MM, the Materials Management Module, and FI, the Finance Module. When you ship a product, your inventory asset goes down and your cost of goods sold expense goes up.
Basic accounting.
Right. But how does the system know which GL account to hit? It starts with the movement type, defined in VOV6. Usually it's 601 for a standard goods issue for a sale. If you're getting GL account errors during shipping, the first place a good consultant checks is the movement type here.
It's amazing how interconnected this all is. You pull a lever in SD, and a gear spins in finance.
It's all one big machine.
Speaking of connections, let's talk about the traffic police, VTLA and VTFL. The guide calls this copy control.
Yes. This is the unsung hero of SD. It's also the source of most of the pain. It's responsible for moving data from one document to another. VTLA takes data from the order to the delivery. VTFL takes it from the delivery to the billing document.
The source says something like 60% of data missing issues are solved here. That seems high.
I'd say it's even higher, honestly, because SAP is fundamentally lazy or, efficient, depending on how you look at it.
Right, doesn't want to ask for the same information twice.
Precisely. If you entered the customer's PO number on the sales order, you damn well expect it to copy to the delivery note and the final invoice. If it doesn't, that's a break in copy control.
And this is where that term split analysis comes in. I feel like split analysis is a term that gives consultants nightmares.
It's the classic headache. Your business wants to send one single invoice to a customer for 10 deliveries you made to them this week.
Makes sense. One piece of paper.
But SAP splits them into 10 separate invoices. Why? Because something in the header data of those deliveries didn't match perfectly. Maybe one delivery had different payment terms, or a different bill to address was used by mistake, or a different Inca term. VTFL, the copy control, has rules that say if these key fields don't match, you must split the invoice.
And split analysis is the tool that tells you which field was the culprit.
Exactly. It shows you the mismatch.
And there are little snippets of code here too, right?
Yeah.
VOFM routines.
Yes, data transfer routines. These are little ABAP code snippets. You can get really, really granular with your logic here. You can write a routine that says, only copy the price if the order isn't on credit block, or copy the text from the sales order item, but only if the material is from plant X. It gives you immense control over the logic of the data transfer. It's where you tell the system how to translate the story from one chapter to the next.
Okay, rounding out this engine room section, we have OVZ9, Availability Check Control.
OVC9, the most contentious screen in the entire system.
Contentious. Why contentious? Is it political?
Extremely political, because this screen is where the sales department meets the production and logistics departments, and they have fundamentally different goals.
Okay.
Sales wants to sell everything. If there's a box on a shelf, they want to promise it to a customer, they want to close the deal today, their job is to get orders.
Right. And production.
Production says, wait a minute, that box you see is our safety stock. We need that for an emergency in case a machine breaks down. Or logistics says, we haven't even received that box yet. It's on a purchase order on a boat coming from China. Production wants to be conservative. Sales wants to be aggressive.
And OVZ9 is the referee. It decides who wins that argument.
It is the referee. OVZ9 is where you configure the scope of check. It's where the business has to decide what available actually means. It asks the specific questions. Do we include safety stock in our promise to the customer? Do we include stock on incoming purchase orders that haven't arrived yet? Do we include stock that is currently sitting in the quality inspection bay?
That seems really risky. Selling stock we don't physically have yet.
It is, and that's why the expert strategy is to split the brain of the system. You configure one more optimistic scope of check for the sales order.
So you let sales be optimistic?
Right. Let's include those incoming POs, get the order into the system so we at least capture the demand, and the customer has a confirmation. But you configure a second, a much stricter scope of check for the delivery.
Ah, I see.
When it comes time to actually create the delivery note and tell the warehouse to put the box on the truck, at that point, you only check what is physically unrestricted in the warehouse. No shipping error.
That is smart. Get the order on the books, but don't promise the truck until you can actually see and touch the goods.
Exactly. It manages customer expectations without stopping the business from taking orders.
Okay, that's the engine. We've built the car. Now let's talk about what fuels that engine. Money, part 2 of our guide. Pricing and finance integration.
Pricing.
Yes. Yeah.
This is arguably the most complex submodule in all of SD. It has its own engine within the engine called the condition technique. It's a logic puzzle inside of a logic puzzle.
And the backbone of that whole puzzle is VO8, the pricing procedure.
Right. Think of VO8 as a grocery store receipt tape. It defines the sequence, the order of operations. Step 1, base price. Step 2, customer discount. Step 3, promotional discount. Step 4, tax. Step 5, freight.
And it sums them up to get the net value.
Precisely. It tells the system the exact mathematical order to follow. You can't calculate a percentage discount until you first establish the base price to apply it to. VO8 enforces that logic.
The guide has a very stern, don't touch rule here. Never delete standard SAP steps. Why is that so critical?
Never. I mean, never, ever. Even if you look at a step and think, we don't use this, I'll just delete it to clean it up. Don't.
Why not?
Because SAP's internal hard-coded programs expect certain steps or subtotals to be there for its calculations. For example, the net value of an order is usually stored in a specific subtotal bucket, say subtotal 4. If you delete the step that generates that bucket, the math for the entire document breaks. Reports break. Everything breaks.
So what do you do if you don't need a step?
You just mark it as statistical. There's a checkbox for it. That turns it off mathematically. It doesn't add to the total, but it leaves the structure intact. It's a non-destructive way of disabling something.
There's a field here called the account key. It has codes like ERL, ERS. This seems to be the tag that throws the money over the wall to the finance team.
That's exactly what it is. The account key is just a simple 3-letter tag, but it's the critical instruction. It tells the system, this value isn't just a number, this particular value is revenue. Or this value is a sales deduction, or this one is freight income. It categorizes the money.
Which leads us directly, I assume, to VCOA, revenue account determination.
The perfect segue. VCOA is the bridge. It's the Rosetta Stone between SD and FI. It's a giant mapping table.
Okay.
On the left side of the table, you have the SD world. The account key from your pricing procedures, say ERL for revenue and maybe the customer's account group and the materials account group. On the right side, you have the finance world, the specific general ledger account number, say account 400,000 for domestic revenue.
So when I try to create an invoice in VSE or 1 and it crashes with that horrible error, GL account not found, VKO is the culprit.
99.9% of the time, yes. The system is trying to post money to a bucket, but that specific combination of customer material and account key doesn't exist in the map. The system says, I have $100 of revenue, but I have no idea which drawer in the accounting cabinet to put it in, so it stops.
The guide has a specific tip here about the provision account key. This is for rebates.
Yes, this is a tricky one. If you are doing rebates or accruals where you aren't paying the money to the customer yet, but you need to set it aside on your books as a liability, you must map the provision account key in VKOA.
And if you don't?
If you don't, the system can't post the liability. It knows it owes money, but it doesn't know where to record the debt on the balance sheet. So the entire invoice will get blocked from posting to accounting. It's a very common error.
Now, zooming in a bit to the specific price elements themselves, VO6 defines condition types.
Right. So if VSO8 is the whole receipt, VSO6 is where you define the DNA of each line on that receipt. Your base price, PR000, your customer discount, K007. This is where you say, is it a percentage? Is it a fixed dollar amount? Is it based on a quantity scale?
And crucially, can the user change it? That manual entry setting must be a popular topic of discussion.
Always. Why can't I change this price? Well, because in VSO6, your base price condition, PR00, is probably set to not possible to process manually. You might have a base price that comes from headquarters that no sales rep is ever allowed to touch,
Sure.
but maybe you have a manual discount condition that they can enter freely to help close a deal. You control that permission, that power, right there in VSO6.
And what's this difference between header and item condition?
That's crucial. An item condition applies to just one line, like $10 off this specific widget. A header condition applies to the entire order, $100 off the total invoice value. If you create a header condition, the system needs to know how to distribute that $100 discount across all the different items on the order. Does it split it based on their value, based on their weight, based on their volume? You define that distribution behavior in VO6.
Finally, in pricing, we have the switchboard, OVKK.
Pricing procedure determination. It's a formula. The big question is, how does the system know which pricing procedure to use? Because you might have a very different pricing logic for your export sales versus your domestic sales, or for services versus products.
Right. You have multiple procedures.
So OVKK looks at a combination of three things: the sales area, which part of our company is selling; the document pricing procedure, what kind of order is this? A standard order, return; and the customer pricing procedure, who is the customer? Are they a wholesaler, a direct consumer?
So if my new pricing logic isn't showing up on a new order, I should probably check the customer master record.
Yes, that's the most common mistake. You do all this beautiful pricing configuration, you test it, it works. Then you go to create an order for a real customer and it fails. Why? You go to XD03 or the business partner transaction in S4 and check the sales area data tab. Sure enough, the cus.prec. field has the wrong single-digit code in it. If that's wrong, OVKK can't find the right formula, and you get the wrong pricing or no pricing at all.
It's like a combination lock. You need all three numbers to be correct to open the safe.
That is a perfect analogy, and if one number is off, the safe stays shut.
Which brings us nicely to the variables in that combination lock. Master data, part 3 of the guide.
Master data is the fuel. I always say bad master data breaks good configuration. You can have the most elegant, perfect rules in the world, but if the data flowing through those rules is garbage, the result will always be garbage.
We start with the classic XD01 or VD01, creating the customer. But the guide flags a big change here with S4ANA.
Right. So if you are on the newest version of SAP, XD01 is technically dead. It's been replaced by a single unified transaction called BP for Business Partner.
Okay.
The interface looks different, it's more modern, but the concepts are identical. You still need to create a customer role, and you still need to define the sales area data. That part hasn't changed.
The guide calls out two fields as being especially critical: shipping conditions and tax classification.
Absolutely critical. Shipping conditions is one of the key inputs to determine the shipping route. Is this customer always express or standard ground, or do they pick up at the dock? If you get that wrong in the master data, you might promise a 2-day delivery for a product that defaults to a barge shipment that takes 3 weeks.
Not good. And tax classification.
Even worse, if you don't mark a customer as tax liable in their master record, the system will assume they are tax exempt and it will charge them 0 tax. Now imagine doing that for a whole year for a major customer and then getting audited.
That's a compliance nightmare.
It's a massive compliance nightmare, and it all comes down to one field being wrong in one customer master record.
Now here is a transaction I find fascinating. VDA51, Customer Material Info Record. It sounds really boring, but the guide calls it an override.
It is the trump card. In SAP, there's a hierarchy of data. The system looks at the material master for things like weight and description. It looks at the customer master for general shipping rules. But the customer material info record sits on top of both of them. It's specific to the unique relationship between this one customer and this one product.
So if the customer orders something they call Part A123, and internally we call it Widget X, this record's what translates between their world and ours.
Yes, that's one of its main uses. It maps their part number to our part number, but it goes deeper than that. If you define a specific shipping plant in this info record, it will override the default plant in the customer master and the default plant in the material master. It forces the system to ship that one product to that one customer from a specific place.
That is incredibly powerful. It allows you to handle all the exceptions without breaking your general rules.
Exactly.
What about VB11? Material determination. This is for swapping products.
Yes. The classic use case is product obsolescence. You're discontinuing old Model A. The new and improved new Model B replaces it. You don't want your sales team to have to know that. You don't want them to have to look up a memo. You just set up VB11. When they type Model A into the sales order, the system automatically swaps it to Model B for them.
The guide mentions you can make this invisible or manual.
Right. You can set it to be automatic, where the swap just happens in the background and the user might not even notice the material code changed. Or you can set it to manual, where a pop-up appears saying, hey, Model A is no longer available. Would you like to select Model B or the premium Model C instead? It's great for upselling or managing promotions too.
Moving to VOPAN. Partner determination. This is all about the roles in the transaction. Sold to, shipped to, billed to, payer.
These are the players in the game, right? VOPAN is where you configure the rules for those players. You can't have an order without a sold to party, the one who buys. That's mandatory. But maybe the contact person is an optional partner. You define all that here.
The troubleshooting tip in the guide is about the not modifiable flag.
Ah, yes. This is a common service desk call.
Hmm.
A user calls you and says, I need to change the ship to address on this specific order, but the field is grayed out. I can't click it.
And the reason is?
The reason is usually that in the partner determination procedure, the not modifiable flag has been checked for the ship to partner role. The system is intentionally locking it down based on your configuration. It's a control. It prevents users from, say, shipping goods to unapproved random addresses.
Now, for what the guide calls the dangerous tool,
Yeah.
XD99 or mass maintenance.
Oh, XD99.
Yeah.
Proceed with extreme caution. Handle with care.
Why is it so dangerous? It sounds useful.
It is incredibly useful and incredibly dangerous because it allows you to update thousands of master data records in seconds. If you make a mistake, you make that mistake 10,000 times over.
The example given is breaking the FIAR link. Unpack that for me.
Okay, so every customer is linked to a specific reconciliation account in the general ledger. It's what connects the accounts receivable subledger to the main financial books. Now imagine you're in XD99 trying to update, say, the payment terms for a group of customers, but you accidentally select and update the reconciliation account field for every single customer in the entire system.
Oh, no.
Oh, yes. You've just severed the link between all your customer receivables and your general ledger. Finance cannot close the books. Your balance sheet is wrong. It is what we call a resume-generating event, and not in a good way.
Resume-generating event. I like that euphemism.
Always, always, always run XD99 in test mode first. Always.
Duly noted. Okay, let's move from setup to the daily grind. Part 4. Sales order processing. We all know VA01 is create order. VA02 is change. But what's the consultant's edge here? What makes an expert different?
It's the analysis button. When you are in VA01 or VA02 and you go to the Conditions tab, the pricing screen, there is a little button at the bottom labeled Analysis.
What does that button do?
It reveals the brain of the pricing engine. It opens a screen that shows you every single condition type the system checked for, which ones it found, which ones it ignored, and most importantly, why.
It gives you the reason.
It gives you the reason. It will say, I ignored this discount because the requirement customer must be in group X was not met. Or, I found this price in condition record 123, but it was overwritten by a more specific price in record 456. It is the primary debugging tool for a functional consultant. You don't need to be a developer and read code. You just need to learn how to read the analysis screen.
And for reporting, VA05. The guide throws some shade here, saying it's notoriously slow.
VA05 is the classic list of sales orders. It's been around forever. But on large databases, if you just go in and hit execute without any filters, it can try to pull millions of records and hang the system for minutes or even time out completely.
So what's the tip?
The tip is to use VA05N if it exists in your version, which is a newer, optimized version. Or be very disciplined about creating variants, which are just saved search criteria that always limit the date range. Don't ask for all orders ever. Ask for all orders this month for this sales group. Be specific.
Let's touch on the pre-sales documents, contracts and quotes. VA21 for quotations, VA41 for contracts.
Right. The key with VA21 quotations is closure. You don't want a quote to stay open in the system forever. It messes up your sales pipeline analytics. So you configure something called completion rules so that when a sales order is finally created referencing that quote, the quote is automatically marked as completed and closed out.
And for contracts in VA41, what's the key concept there?
It's about consumption. A contract is a long-term agreement. Dear customer, you promised to buy 10,000 units of this product from us this year, and we promise to give you this special price.
Okay.
When they issue a call-off order against that contract for, say, 100 units, the system must subtract that 100 from the total 10,000. That process is handled by update logic and copy control. If that's broken, the customer could end up buying 20,000 units at the special contract price when they only agreed to 10,000. You're just giving away margin.
We've taken the order. Now we need to move the box. Part 5. Shipping and logistics. We start with VL01N, create outbound delivery.
This is the transaction that tells the warehouse team to get to work. It's the trigger for picking and packing.
The guide lists a very common error here. No schedule lines due for delivery.
Oh, this one drives users crazy. They just created the order. They look at the order and see the delivery date is today. Why can't they create the delivery to ship it?
Now, why can't they hoard?
It's usually one of two things. The most common is the selection date in VL01N. If the order says ship on Friday the 12th and you run VL01N with a selection date of Thursday the 11th, the system correctly says, I have nothing to do today. You have to look forward in time.
Or the second reason.
The order isn't actually confirmed. Maybe it's on credit block or there was no inventory available when the order was created. Just because a line is on an order doesn't mean it's confirmed to ship.
Once the delivery is created, we go to VL02N to process it. This is where we do the picking, the packing, and the big one, post-goods issue, or PGI.
PGI is the point of no return. It's the moment of truth in logistics.
Why is it so final? What's happening in the background?
Because it's the moment it writes to the financial books. PGI triggers a material document and an accounting document. It credits your inventory GL account, your asset goes down, and it debits your cost of goods sold GL account, your expense goes up. The stock is now physically and financially gone from your company's books.
So you can't just hit a delete button if you made a mistake.
You absolutely cannot just delete a PGI delivery because that accounting document already exists. The auditors would not like that.
So if I made a mistake, if I shipped the wrong thing or the wrong quantity,
You have to formally reverse it using transaction VL09. You can't fix it in VL02N. VL09 creates a reversal accounting document to back out the financial entries first. Then you can go back and fix the delivery. It's a formal audit trail.
then we have shipments, VT01N. This is different from a delivery. This confuses a lot of people.
Yes, and it's a key distinction. A delivery is a document for the customer. It says, here are the goods you ordered. A shipment is a document for the logistics provider, the trucking company. It says, here is the truck you need to send.
So you can combine them.
Exactly. You might put 10 different deliveries for 10 different customers in the same city all onto one truck. That one truck is the shipment.
And this is where freight costs live.
Correct. You pay the trucking company for the shipment, not for each individual delivery on the truck. The freight cost calculation happens in the shipment document.
Now, how does the system even know which route to take? 0VRF, route determination configuration.
This is another one of those formulas, just like the pricing procedure determination, it's an equation.
What's the equation?
It's departure zone, where the shipment is coming from, plus the destination zone, where it's going, plus the shipping condition from the customer, how fast does it need to get there, plus the transportation group from the material, what kind of product is it?
Transportation group, what's an example of that?
That's on the material master record. Is the product a frozen good that needs a refrigerated truck? Is it a hazardous chemical? Or is it just a standard product on a pallet? You can't ship frozen goods on a standard flatbed truck. If the transportation group is missing from the material master, route determination fails and the delivery cannot be created.
Okay, the truck has left the building. Now we want to get paid. Part 6. Start with VS01.
Creating the invoice. And as we mentioned earlier, this is where split analysis really comes into play. You select 10 deliveries to invoice, you hit execute, and the system creates 3 separate invoices instead of 1. You click the split analysis button, and it will tell you exactly which header, field payment terms, Incoterms, whatever caused the break.
And VS04, the billing due list. This is for automation, I take it.
Yes. Ideally, no human is using VS01 manually for every single order. That's incredibly inefficient. You set up VF04 to run as a background job every night. It sweeps the system, finds everything that has been successfully goods issued that day, and creates the corresponding invoices automatically.
But what if those automatically created invoices fail to post to accounting? VFX3.
VFX3, the go live home. When you go live with a new SAP system, you basically live in VFX3 for the first month. This transaction is a list of every invoice that was successfully created in SD but failed to post to the accounting module.
Why would an invoice exist in SD but not post to accounting?
A million reasons. The most common is posting period closed. The finance team has closed the books for January, but you are trying to post an invoice that was goods issued on January 31st, but it's now February 2nd. Or cost center blocked. Or our old friend, the dreaded GL account not found error from our VCOA configuration. VFX3 is your to-do list for fixing all the financial errors so you can actually collect the cash.
Now we are getting into the really cool stuff. Part 7. The technical and troubleshooting tools. The super user kit. The guide says these are the tools that separate the juniors from the seniors.
Absolutely. This is looking under the hood. This is where you stop trusting what the pretty front-end screen tells you and you go look at the raw data in the database.
First up on that list, SE16N, General Table Display.
The raw data browser. The truth machine. Sometimes these standard display transactions, VA03 for an order, VF03 for an invoice, they mask things. They display text descriptions instead of the actual codes. They hide technical fields that aren't relevant to a normal user. SE16N lets you look at the database tables directly, no filter.
We need to memorize a few table names here, it seems. VBAK, VBAP.
These are the holy scripture of SD. If you're in SD, you have to know them. VBAK is the sales document header. VBAP is the sales document item. LIKP is the delivery header. ILIPS is the delivery item. VBRK and VBRP are the billing header and item. If you know these 6 tables, you can answer almost any question. Show me all orders created by user X on date Y for material Z. You can't easily do that in a standard report, but you can do it in SE16N in 5 seconds.
Next is troubleshooting EDI, electronic data interchange. WE02, WE05, WE19.
Right. EDI is how computers talk to computers. Orders coming in automatically from Amazon or Walmart, for example.
Okay.
WE02 is your monitoring cockpit. It shows you all the traffic. A red light means an error. A green light means it posted successfully.
And WE19, the guide calls this a trick.
It's a lifesaver. It's the test tool.
Yeah.
If an electronic order or an IDOC fails, the error message is often really cryptic. It'll just say field missing. Okay, great. Which field?
Right.
WE19 allows you to take that failed message and reprocess it in foreground mode.
What does that look like in practice?
It literally simulates a user typing the data from the IDOC into the VA01 screen, field by field. You watch it happen on your monitor in real time. It fills in the customer, the material, the quantity, and you watch it go screen by screen until it stops and flashes red on a specific field. It takes all the guesswork out of debugging EDI errors.
That is brilliant. Okay, what about output? Printing order confirmations, emailing invoices, NACE.
NACE is the output cockpit. Instead of hunting through the giant configuration menu, which is a maze, NACE gives you a direct shortcut to the output configuration for sales, application V1, shipping V2, and billing V3. It's where you find the condition records that determine, does this customer get an email, a fax, a PDF printed to this specific printer?
And if an output fails, where do you look in there?
Check the communication strategy. Sometimes the system is set up to try and email the invoice, but the customer master record has no email address maintained, so it fails. NACE and the processing log will tell you that.
We touched on ABAP routines earlier, VOFM.
VOFM is where you manage those custom routines, the little snippets of code for pricing, copy control, and so on. But there is a huge, huge trap here, a classic novice trap.
The activation trap.
The activation trap,
Yep.
Yes. You're a developer, you write the code, you save it,
Yeah.
you transport it from your development system to your test system or to production. But it doesn't work. The system ignores your new logic. Why?
Why?
Because you didn't run the report RV80HGN.
RV80HGN.
It's a program that activates all the routines in the target system. It basically compiles them and makes them known to the running application. If you don't run this program after a transport, the code exists on the server, but the system doesn't know it's supposed to use it. It's a classic rookie mistake that leads to hours of panic and late-night phone calls.
Let's talk about blaming other people. SU53, authorization analysis.
Yes. It's not me, it's the security team's fault transaction. If a user says, I can't click this button, or I get a you are not authorized error, the first thing you tell them is, run transaction SU53 immediately after the error occurs.
What does that do?
It takes a snapshot of the last failed authorization check. It shows the exact authorization object and values that were missing from the user's role. You take a screenshot of that SU53 screen, you send it to the security team, and they know exactly what object to add to the user's profile. It stops the endless back and forth guessing game.
And SDO5, a performance trace.
If a transaction is running really slow, like go get a cup of coffee, slow STO5, traces every single database hit it's making. It will tell you, hey, this custom report is reading the entire VBAK sales table sequentially instead of using an index. It helps you pinpoint inefficient code that's dragging the whole system down.
Moving to part 8, credit management. Money again, but this time from a risk perspective.
Right. FD32 was the classic transaction in the older ECC systems. This is where you would go to set a customer's overall credit limit and their credit horizon.
What's a credit horizon?
It's a time window. Do we count open orders that are due to ship in 6 months against your credit limit today? Or do we only care about orders due in the next 30 days? That time window is the horizon.
But in S4ANA, the new version, FD32, is gone.
It's gone. It's been replaced by UKMBP, which is part of SAP Financial Supply Chain Management, or FSCM. It's much more advanced. Instead of just a single manually entered limit, it can calculate credit limits automatically based on complex formulas. It can even pull in external credit scores from agencies like Dun & Bradstreet to use in its calculation.
And OVA8 is where you configure the rules for what triggers a credit block.
Yes. OVA8 is where you configure the detailed logic. Key rule the guide points out is oldest open item.
What does that mean?
It means I don't care if you have $1 million credit limit and you've only used half of it. If you have one single invoice that is 90 days overdue, I am blocking all your new orders until you pay it.
That's a powerful lever.
It's a huge lever for the cash collection team. It forces the customer to pay their old debts before they can buy more stuff.
Finally, Part 9. Specialized functions. Some niche but powerful tools. Let's start with VB01, listing and exclusion.
This is huge in industries like pharma or consumer goods. Listing is a whitelist. It means this specific customer can only buy this approved list of products. Exclusion is a blacklist. It means this customer can buy anything except this restricted list of products.
Which one wins if there's a conflict?
Exclusion almost always takes precedence. If I say you can buy everything from our catalog, but then I add an exclusion for product X, you cannot buy product X. It's a hard stop.
And rebates. VB01.
Rebates, a dying art in the old system. VB01 is where you set up rebate agreements, which are retroactive discounts. If you buy 10,000 units from us over the course of the year, we'll give you a 2% rebate back at the end.
Sounds simple enough.
The problem was, in the older systems, this required a massive performance-killing data index called VBOX to keep track of all the sales volumes. It could grind a system to a halt.
So what's the future of rebates in SAP?
It's a new module called Condition Contract Management, or CCM. The main transaction is WCO/CO in S/4HANA. It's a much more elegant and high-performance way of handling these complex long-term agreements without the heavy data footprint.
Last one. BD87.
Mass reprocessing for IDOCs, for those EDI messages. If WE19 is the scalpel you use to fix one specific error, BD87 is the tool you use to fix 50 of them at once. If 50 customer orders failed to post this morning because a material's accidentally blocked, you unblock the material, go to BD87, highlight all 50 of those failed IDOCs and hit process, and it just reruns them all. It's a huge time saver.
We have covered a massive amount of ground. We've rebuilt the engine, we've filled the tank, we've checked the tires, and we've mapped the entire route.
We really have. We've gone from the deepest configuration tables to the daily user transactions and back again.
The source material ends with what it calls an integration chain philosophy. I think this is the perfect way to wrap this all up. It says, do not memorize these codes in isolation.
That is the absolute key takeaway from all of this. You have to see the chain. You have to understand the flow.
And the flow is configuration, VOV8, defines the rules of the system.
Right.
Master data, XD01, MMM01, provides the variables that flow through those rules. The process codes, VA01, VL01N, are where the user executes the logic.
Yep.
And the tables, SE16N, are where you see the final results.
And when you need to troubleshoot, you just walk that chain backwards. You start with the result in the table. Is the price wrong? Okay. Then you check what the user entered in the process code. Then you check the variables in the master data. And finally, if all else fails, you check the rules in the configuration.
Reverse debugging.
Precisely. If you understand that flow, you aren't just an SAP user who knows a list of codes. You're an SAP consultant who understands the machine.
So, to our listeners, next time you see an error message, don't panic. Just remember the chain, open up the hood, get into that engine room, and follow the logic from end to beginning.
The system is only doing what you told it to do. Your job is to figure out where you told it the wrong thing.
Thanks for diving deep with us today. This was fantastic.
My pleasure. This was a lot of fun.
We'll catch you on the next one.